I think at the margin, but I was really looking for the Fed to be very, very dovish and really spin everything that they did in Q4 of last year back the other way. Whether they came to 1 or 0, I don't think the market would have really had a huge impact. At the margin, this is better, but I mean, the ending of QT was well advertised. The fact that they're tapering immediately and it's done by the fall is probably somewhat better news. But this was going to be a dovish Fed no matter how you sliced it, and I think the market's reacting to it accordingly. And there was, I think, as Sarah pointed out in the opening to the segment, some risk that maybe Jay would miscommunicate a little bit, as he's done in the past. And I think we're still hedging Jay's communication skills a little bit, and probably what we got today was a really clear Jay Powell, and that's the biggest message, is that we've got a chair that seems to be better at communicating with the market and not making any of those errors that he made in Q4. And I think that's where the market's hedge was, and that's why yields are 10 basis points lower and stocks are a little higher. Not just better at communicating, David, but better at agreeing with the market, wouldn't you say? I still think it's an open question, though, as to which way the Fed goes next, cut or hike. And Powell did not give an inch really on either. He said the outlook was pretty good, but didn't really hint at the next policy action. Yeah, I agree with that. I would say I still think the market has jitters when it comes to Jay opening up and talking. We had a lot of scars from last fall and last winter, and so I would still say that it's not going to be easy for the market to just run with him and kind of treat him like a Yellen or a Bernanke at this stage. He's probably got some work to do, but this was a great effort on his part to kind of make repairs, and I think it's consistent with what we always thought, which was this was going to be a Fed that was stopping somewhere around 2.5%, was going to watch and wait and see, look at the growth around the world, look at what the tighter financial conditions are bringing, not just to the U.S., but to China and to other borrowers in dollars. And they're doing the right thing, and I think the market's applauding that.
Kourtney, what's your take?
Well, you know, it's interesting. I actually applaud Chairman Powell today. I think he did exactly what these markets need. The markets do not like uncertainty, and he did everything right today. Whether you agree with the stance that came out of the Fed today or not is somewhat irrelevant. What we have is complete transparency in the data. We know exactly what he's thinking, how he's thinking about it, consistent with the data dependency. I think this was a phenomenal showing by our chair, and I think it gives incredible confidence to the markets as to what we can get from the Fed at any given point in time.
Steve Liesman joins the conversation now. He was, of course, in that news conference, asked the Fed chairman about global growth. Steve, what stood out to you overall?
Did that for you, Sarah. I thought you might be interested in the global growth story. Look, I think David Zervos, and I'm sorry to get the name of the other guest there, has an interesting point here. The first of all is Powell was rock solid. We came at him 4 different ways to Sunday, right? Saying, what's your next move? And he said, we don't have it going either way. In fact, let's listen to what he said on just one of the 4 times he answered the same question.
The data are not currently sending a signal that we need to move in one direction for another, in my view. In our SEP projections, committee members, participants generally see growth of around 2%. They see unemployment remaining below 4%. They see inflation remaining close to target, and they see growth, as I said, around 2%. So, you know, that's a positive outlook. It's a favorable outlook.
So let's remember now what the Fed chairman is selling here. He's selling a downgrade on growth. He's selling a downgrade on employment, which has now seemed a little bit higher this year. And he's selling fewer rate hikes. So the idea that he can get out of that without causing panic, I think, gets to what David Zervos was saying, this idea of, you know, he's coming along now. He's got a message. He was able to sell it and sell a difficult one, by the way, in a way that didn't panic the markets.
Victoria, what's your take so far on the market reaction? Equities up, but flat on the day. Does this revitalize your outlook on U.S. equities?
Doesn't change our outlook, but I mean, earlier we took such a jump lower when Trump was speaking about leaving tariffs on, so we saw the market down about 160 points. We got all that back, actually went positive for a little bit with Powell speaking, so I guess it shows the Fed maybe was a little bit more of a concern for investors than the U.S.-China trade, at least for today. So I think it just takes some of that uncertainty off, as Kourtney was saying, allows investors maybe to take a broader look and see where they want to pick and choose their places to be. On the fixed income side, having yields go down that low, I mean, we actually broke down below that 255 level on the 10-year, so that's concerning to see how far now will we actually be able to drop from there.